Hello everybody and welcome to the Cyclical Investors Club YouTube channel. My name's Corey Kramer and today we're going to be analyzing a Mosaic stock. This one came in by request down in the comment section of one of my other videos along with quite a few other fertilizer stocks that I've covered. This one will actually be a little more informative, and I've talked about it in the other videos because it has a longer history that we can look at. They haven't had as much kind of changing, like total change M&A and splits and everything like that. So it's kind of good to be able to look at the historical data here. As always, this isn't individual investing advice. This is just how I analyze stocks. If you have a stock you would like me to analyze, just put it down in the comments section. I'll get it on the whiteboard behind me. Eventually, I will make a video of it. If it's a stock that's in the S&P 500, I post those on YouTube for free. The rest I post in Patreon, which is $5 a month. And if you join Patreon, you can get a big discount to the full Cyclical Investors Club service over on Seeking Alpha. And there we have all the spreadsheets that I use, lots of strategies, or a few strategies that aren't public. You can chat with me anytime, direct message me. I usually get back to people very quickly. And then there's a lot of other investors there too that know and understand my strategies that can help us all find good ideas in the stock market as well. So you can consider joining there. Those links are all down in the description. I also have a link for 25% off Fast Graphs, which is what I'm going to be using in this video. And I get a little commission from that if you guys use the link. So Mosaic. The first thing I always check is kind of the earnings history. And these guys have a pretty interesting earnings history over the past 20 years or so. Don't really have too much data pre-2005. I'm not sure what this year down here was all about. So we can just kind of ignore that for now. Actually, let's just shrink this in a little bit. We'll shrink these years in that are expected to go down. Maybe if I go a little farther, we can actually get the individual years. We don't really need them for this stock though. So let's just keep it, we'll keep it wide here. So we can see that there was a big drop in earnings back. Well, first there was a big rise in earnings going into the Great Recession. And then there was a big drop in earnings followed by a bounce back. And then what we have over time is this slow decline in earnings, still very volatile, very cyclical, and eventually they bottomed during COVID. Actually, a little bit before COVID hit is when they bottomed. So, and then more recently, we have this giant spike back up again during the post-COVID recovery. So the way I would probably think about most commodity business, not every commodity business, but most of them, and those that are related to like fertilizers and things like that, like Mosaic is they're connected to energy prices and oil prices quite a bit, because a lot of agricultural production goes into producing things like ethanol, which when the prices for gasoline go up, the prices for ethanol go up. And so the prices of the commodities that you can make that from, or biodiesel too, we're talking about like soybeans, other ways that you can create fuel from crops. So those prices go up as well, and that creates more demand for fertilizers and all the inputs that go into that, right? So when we had this giant, oil got up to like $150 a barrel or something, right around this peak here, when we were back in 2008, and then when that crashed, then everything came crashing down. Oil actually bounced back up again soon after that, and again we have a bounce back, not quite as high, but that happened. And then after that, we have pretty much had this kind of slow decline in oil price, because fracking, they continued to produce a lot of oil because they had invested a lot during the boom. And so the price of oil came down and the price of commodities followed. And we have this long down cycle basically that lasts like almost 10 years, maybe 8 years. And that kind of explains all this. And it can be pretty choppy along the way, but these cycles can be a little unpredictable, a little weird. There can be different technologies that come into play. There can be geopolitics now that come into play. I mean, there's a lot of things that can go into it. So they're a little bit unpredictable, but I do think we can tell when we're in a boom, as in right here, the last couple of years during the COVID boom. You can just look at it compared to what was going on beforehand and kind of see it. And you can also tell when we're not in a boom, but picking the bottom can be quite difficult. So I don't actually track this particular one because these can be kind of hard to find bottoms, and then how long it will take for the eventual recovery to come can be difficult too. If we had a longer chart that went back to the 1980s, we would see these big cycles again. We're in the late 70s, maybe even going into the early 80s. We had this big commodity boom cycle. And then we had like a farm crisis in the 1980s because of it. So if you can imagine this decline that happened here after the GFC happening much more quickly, then you could look at the same thing with oil. At the same time, there was a huge crash in the oil market and commodities there as well. So if you look at Mosaic and you look at Exxon, just kind of take a look at the graph here, and then Exxon's not as extreme, right? But the same pattern is there. You have this boom in earnings, you have a big drop, you have the comeback, and then you have this slow decline until we eventually got negative oil during the heart of COVID, which was unusual, right? But the other pattern, and then you have the spike in recovery that we've had, all right? So it's the same pattern, but not quite as pronounced. Well, not nearly as pronounced with a big company like Exxon. But if you found the right smaller oil business, you could probably see a pattern similar to Mosaic, especially with regard to the earnings. The price can sometimes, it all depends on what the market's kind of looking for in the future. To me, this decline starting once we got into 2002, by the early 2002, to me, this bust that happened in 2003 was very visible. And you can tell by the stock price reaction that started going down, it was visible to others as well. Much more so than during the Great Recession, when the price was well above where earnings were. So the market anticipated this. Analysts are anticipating earnings declines. Usually these declines during down cycles are steeper or longer than predicted. So they probably aren't quite as negative as maybe they should be. We know that even before COVID, earnings were like almost nothing, right? So we could, it's not unreasonable to expect they could come down to some kind of level like that, right? You should at least be prepared for it as an investor. So, but I don't think they're super predictable. You just kind of can tell at the extremes. I think people probably could have told at this extreme in here that this decline would come. And it's already been a big decline, which is probably why folks are asking about the stock. Already down 60%, right? I think that's mostly predictable, or it was. From here, it gets a little trickier, though. One way to think about it would be to go back before COVID and say, okay, what was the stock price trading at? About 20 bucks a share, maybe a little lower than that here. So for me, I would say it's not unreasonable to think that the stock price would trade back down to there during a down cycle, especially as people get more negative, as everybody that's bought the stock in the last several years is underwater. And as that drags on, people will be more likely to sell the stock. And we know the earnings are actually moving down and expected to move down. And so there's like no light at the end of the tunnel probably, unless there's a shock or something that happens, which happens. That's why it makes it so unpredictable. But for me, I wouldn't take a chance on this stock until it was probably under $20 a share. And then I think you can start thinking maybe a more speculative position, right? So and it's pretty simple. You just look at pre-COVID, you look at like $19 a share. Okay, it gets down to there. Even in 2017, there was kind of this trough, and it's kind of starting to find an earnings equilibrium a little bit here, and it got down under $20 there. So I think it's okay to kind of maybe think about buying there, and then you just wait. And then the question is, well, when do we get the next spike? When do we get the next boom? When do we get the next disruption or whatever that happens where these prices go up again? And I don't think anybody really knows that, but if you buy at a good price, you can kind of, and you don't buy too much, and just understand that it's all really going to be determined by when the next upcycle is, on how good your returns are going to be. If you get lucky and the upcycle comes in 2 years, okay, now you could get a double from 20 to 40 in 2 years. That's great. But it also could take 7 years, okay? And so then your returns, you get the same double, but it takes a lot longer to get it. Other than that, I mean, it looks like a pretty decent enough quality business. I mean, usually I wouldn't buy a business where earnings were going down like this, but we know why. We know that it's an unpredictable commodity cycle, basically. That's the underlying kind of cause of it. So if I saw this chart for any other business, I would just avoid it. And actually, I don't attract Mosaic because I just think there's probably going to be other better opportunities. But if I had cash and I really wanted to put it to work, and the rest of the market was high and everybody was in like AI and tech and everything, and I already had enough of that and there was no deals there, look, I might come in if it's under $20 and take a small position. Or if it really gets down under 10, now the risk reward gets a lot better. You can wait a lot longer. You could wait 10 years, and if a $10 stock goes to 40 back during whenever the eventual boom comes, which you might have had to do back in the 80s, right? You could have waited, if you waited from 83 to 93 in the oil and commodity and energy space, ag space, I haven't actually looked at this, but we did have eventually with the Gulf War in the early 90s a spike in oil. So even though they just got decimated then, you probably could have done well if you bought at a low enough price. So if you think, okay, well, you can get 400% return, or 300% going from 10 to 40, right? 20, 30, 40, 300%. You have a 300% return, or 3x, I guess that would be 400%. You can wait a long time for that and just kind of sit there. So that's kind of the way. The other way to think about it is, if something really bad happens, recession, all the stars align in the negative direction, maybe Saudi Arabia just starts pumping out cheap oil like this, which is what happened during this last decline here. Then there are scenarios where it goes back down to $10 again. So if you're buying at 20, you need to keep in mind you could lose half. I mean, and without having anything bad happen with the company or whatever. And so there's a couple different approaches you can take there. But from under 20 down to under 10 is kind of, okay, maybe you could talk me into doing it. And if depending on what else was going on with the portfolio, it gets interesting in terms of risk reward. And then you just have to wait basically and see how it turns out. So that's how I would be thinking about it. I wouldn't be buying yet personally. That doesn't mean it couldn't spike up, because like I said, we don't know what's going to happen. But I don't want to buy at 30 and have it and have to sit and go down to through 10, or most likely it goes down to 20 and then it just sits in that range for however long. And so you're just kind of sitting on moderate losses for several years, and so that's the kind of situation I don't want to get in. I want to make sure I'm buying it cheap enough that I can comfortably just wait until the next upcycle happens, whenever that is. So that would be my approach to Mosaic. It's a tricky one, but I mean, I wouldn't just totally write it off, even though I don't track this one. I think there is a potential play there in certain situations that I would be open to. Okay, if you found this information useful, give you a different way to think about things when you're investing in stocks like this, hit the subscribe button. If you have a request, drop it down in the comments section, and I will see everybody later. Bye.